going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so don't miss future videos. All my content is free. Hit that subscribe and notification bell. You get free content from me. All my stuff is free for you. I got you. So, I bought SCHD. So, I want to sum up the last video I had, MSTY. There are some decent YieldMax ETFs. I'm going to get some answers myself privately and to try to fit my investing philosophy. I do think that there's some ETFs that might be worth it, actually, for that fit my investing strategy. It was a great time for MSTY with the ride, but now I'm going back to something that I was eventually going to invest in. I told you numerous times in my videos that I will buy SCHD eventually. Now's the time. So now I have SCHG in my IRA, and I have SCHD in my dividend portfolio. I will never change that philosophy. SCHD, I believe, is for the dividend portfolio and for passive income. SCHG is for growth. And I'm going to explain my rationales why I like SCHD in my dividend portfolio. And what I may do is a strategy to buy more SCHD. If you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check out SCHD right now. I'm going to do the first analysis or looking at a graph, just comparing SCHG versus SCHD and the S&P 500. So S&P 500 is going to beat SCHD long term. SCHG is actually beaten the S&P 500. So still, the growth in 5 years with SCHD is 61.11%. The S&P 500 is 96.56%. SCHG is 139.04%. But I'm going to show you some things that SCHD is good, obviously, other than the stock split, which made it attractive. But I'm going to show you the inside of SCHD, what makes it good. So first, we're going to go to SCHD. First thing I look at is expense ratio. That is a very good expense ratio at 0.06%. So I like that. That's already one good thing. The goals is to track as closely as possible before fees and expenses the total return of the Dow Jones US Dividend 100 Index. The nice thing is they kick things in, kick things out. They don't cut it, they kick them out. So that's one good thing. So here's something that's good, okay? The big thing was the share split, 3-for-1. Okay, that's good. Not a reverse, a share split. So we have some good things. Here's some nice characteristics. Return on equity, 28.18%. That is nice. Has a little bit of a turnover rate of 28.28%, but that's good. Things suck, you're out. That's the good thing. You're bad, you're out. Okay? So that's one thing. Here's its performance, still not too bad. Okay. Market price in the past month, 2.55%. Remember, this is a dividend, and it's actually beating the Dow Jones US Dividend 100 Index, 2.52%. So this is why I like it in my dividend portfolio, because sure, net asset value will grow. Okay, so this is if you did a $10,000 investment, it's still not too bad. I mean, it's right now below 30%, and that's you did investment as of 1/31/2025, and I'm pretty sure it's within 10 years. You can correct me if I'm wrong. So this graph represents a growth of hypothetical investment of $10,000, okay? It assumes the reinvestment of dividends and capital gains and does not reflect the sales loads, redemption fees. Okay. So let's look at a few things. All right, so here's the holdings that it has. These are really good dividend growers too. So Avi, I own them, 4.87%. Coca-Cola, 4.67%. Pfizer, 4.22%. Verizon, I have them as my high yielder. Don't expect dividend growth with them. Pepsi, I have. Chevron, I have. Home Depot, I have. Altria, I have. UPS, I have. US Bancorp, I have. One Oak, I have. Kimberly-Clark, I have. Fastenal, I don't own them, but they're gaining a lot of attention with the dividend investing community. I'm surprised Ford's still in there. I'm sure they'll kick them out. Fifth Third Bancorp, I have. Hershey, I have. Darden, I have. Hero, I have. Regions, I sold earlier. That one I may rebuy. That one's a pretty good dividend grower. Fidelity National Financial, I have. eCorp, I sold. The dividend growth wasn't there, so don't be surprised if they switch that one out. H&R Block is a pretty popular one, too. Nexstar Media Group, I have. And thank you, Russ, for going over that one because I like them. I'm pretty sure I still own Bank OZK. So I'm going to be honest with you guys. And if you guys have seen I got Wendy's too. You guys have seen my previous videos and I've went over SCHD and I've said this on X. I studied SCHD a lot and actually looked at the stocks inside SCHD to help build my dividend portfolio. But now, since it has all that stuff in there, and I just kind of sold my YieldMax ETFs. I may rebuy the ones that appear to be more stable. I'm going to do a little bit more research. But the synthetic calls, I don't know. I don't feel good about that long term. So just looking at, these are very, very solid stocks that are in SCHD. So you have to, when I tell people, when you look at an ETF, before you buy it, look inside of it. What is inside of it that, is fitting your investing philosophy or your dividend investing strategy? Now, I always said dividend growth always wins. The YieldMax ETFs bought very good income for my dividend stocks. Can you use that as play money? Throw 2,000 in MSTY or NVDY, see what happens. Sure. Could I do that in the future? Maybe. But this is something that is really, really predictable. Okay. I like predictability. There's no way I would retire on the YieldMax ETFs unless if they're stable. Synthetic calls, no way. So let me show you the distribution history. I like going back a little bit just to show you the percentage. So 2017, it was in the 30s, a little bit in the 20s, and then it hit the 40s. Pretty good with the 40s in 2019. Then in 2020, it started hitting the 50s and 60s. So that's good. And then 70s in 2022. And then 63, 70, 56 in 2023, and then 60, 50, 70, 61, 80s, started hitting the 80s and 70s. Okay? And then you see the split, okay? So there's a little bit of consistency there. It's going up slowly. So I like that. This is something long term. Unfortunately, there's an expense ratio, but people have really, I'm looking at the trends, okay? Is it meeting my investing philosophy? Yes. Okay, so this could be something that what I may do, my M1 Finance portfolio. I have my curve, maybe these new YieldMax ones. I don't quote me on that, but if it looks good and it matches with my philosophy, sure, I'll get them. I got the Pro Shares BITO. I got all that income. I can start building up. So each week, these monthly dividend ETFs, I'm going to load them up and then load SCHD. And then what I plan on doing is using that income to go after my high yielders. Now you're asking me, why am I going to use the income for SCHD to the other income stocks? Well, if I'm feeding it and feeding it and feeding it and feeding it just about every week within that pie, it's going to be growing. Okay. So I'm going to start dollar cost averaging, putting it in this section, and I'm going to show you my perfected section probably next week. I'm going to show you everything I'm doing, what I'm planning, because if M1 Finance allows this, it's going to be the biggest game changer for my dividend portfolio, which I can really execute. Now, let me show you so far what I'm going to be doing with E-Trade and BITO with that income on E-Trade. So I sold NVDY, put it in BITO. What am I going to be doing with that BITO? I'm going to show you. This is what I'm going to be doing with BITO. Each month, that income of BITO is going to go directly into this pie section. Going to go into that pie section on M1 Finance. Then I'm going to be throwing money in weekly to these, the Curve, the BITO. I'm hoping EETH will get added on there. I think Ethereum, adding that with that type of thing. That's probably another one that I'll be buying for monthly income. But I got the Curve, I get that. Uh, you know, integrating this strategy, because remember, I want $2,000 to $4,000 a month on monthly passive income, and then quarterly, I want at least $6,000. So that'll be, if I can long term wise, get to $10,000 consistently. I mean, I'll be golden. And again, with my integration of high yield dividend stocks, SCHD, solid dividend growth stocks, really good dividend growth stocks, okay, and then high yielders and REITs, I think I'll be in pretty good shape, in theory. So let me jump back to M1 Finance. I'm currently at 6 shares of SCHD. Now there's some things behind the scenes. Hopefully I'm going to get my money back, but there may be a huge distribution in SCHD. Haven't declared it yet or thought about it, but maybe a lump sum of money in SCHD. That could be a possibility. So a good headache to have. Hopefully I'm going to get my money back from something. I'm really not going to disclose it yet, but that's kind of what I'm doing. The dividend growth rate of SCHD is very fantastic. I'm going to jump to that real quick. I'm on Seeking Alpha. Okay, the yield's pretty good. It's about 3% what I like. The dividend growth rate, okay, 12.23%. Dividend growth rate in 10 years, 11.04%. 5 years, 11.59%. 3 years, 9.87%. Consecutive years of dividend growth, 13 years. Dividend growth always wins. Why I'm buying it. Why I'm going to enjoy in the future earning passive income with SCHD, and I am part of your cult. I'm part of the SCHD cult. If you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I will have a video for you tomorrow. Take care and have a good one. I'm going to jump to my disclaimer. So as a reminder, this is a disclaimer. Do not use my YouTube channel for any form of financial advice. Strictly for entertainment purposes only. Investing is a big risk. You can gain money, can lose money. So be aware and do your due diligence. Go to a financial advisor for financial advice. Go to a tax advisor for tax advice. Please don't ask me for any form of financial advice. I'm going to refer you or say I don't give financial advice. Be aware of your investments. You can lose money investing. So be very careful with your investments. Take care and have a good one.